Welcome to the Davis County Assessor's Office video on how to fill out a personal property filing statement for an existing business. As you will note, on line 1 there is already a value filled in. This is the amount of the value of items you have previously declared on your personal property filing statement. This amount is the total of all assets listed on your Schedule A. Next, we will go to line 2. Line 2 represents the increase or decrease in your annual supply amount. Your annual supply amount is the total amount of supplies you use for 1 year divided by 12. Supplies are things such as paper, toner, paper clips, pens, pencils, other consumable things that you use. Things that are not included in supplies would be things that are consumed during the providing of the good or service to your client. More information regarding supplies and what constitutes a supply can be found on the instruction sheet. For this example, we are going to be increasing the supply amount by $60, so we've entered $60 on line 2. Line 3 is the total of lines 1 and 2. For this example, $1,872 plus $60 equals $1,932. Next, we're going to show you how to calculate what makes up line 4. First, you will need to go to our website and print a copy of the Schedule B for existing businesses. This is where you will record anything that you disposed of or acquired during the prior year. In this example, we've added a new cell phone for 2016. The acquisition cost was $450. Next, we'll go to our percent good rate. Short life equipment, which is where cell phones are located, is Class 3, and we'll also find 2016 because that's the year of acquisition. The point where those two intersect is our percent good rate for this filing period. 0.82 or 82%. We will move 0.82 over to our Schedule B under percent good rate. $450 times 82% equals a taxable value of $369. The next item that we're going to list as an acquisition is software. It was also acquired in year 2016 at a cost of $1,000. Going back to our percent good rates, software is located under Class 1, short life property. Year 2016 and Class 1 intersect at 0.69 or 69% good. We will move 0.69 or 69% good to our Schedule B under percent good rate. $1,000 times 69% good equals $690 as the taxable value. Next, we will total the taxable value of all of the acquisitions. That total goes on line 9. The total for acquisitions in this filing period is $1,059. Next, we're going to work with any items that have been disposed in 2016. In this example, we're going to be disposing of the cell phone. In order to dispose of an item, please list it on the disposal section of Schedule B exactly as it appears on your Schedule A. In this example, it is property Class 3, description is cell phone, the year acquired was 2014, cost was $300, and the current percent good rate is 51% for a taxable value of $153. The total of all disposals is listed on line 10. In this example, it is $153. You will take the cost of all of your acquisitions, subtract all of your disposals, and that becomes the additional value that you will be listing on line 4. In this example, it is $906. That is the amount we will transfer to the front page of the filing statement. As you can see, we have transferred the $906 to line 4 of the filing statement. Next, we're going to add lines 3 and lines 4 together. In this example, the total is $2,838. This is your line 5 number. Next, we will be calculating the tax. In this example, you can see that the total taxable value is $2,838. This is below the $10,300 exemption level. You may claim the exemption from tax if you have reported all of your assets and file by May 15th. If you're taking the exemption from tax, please complete all of the information that is requested in the application for exemption box that is at the bottom of the front page of the filing statement. An exemption from tax means you do not owe tax. If you're claiming the exemption, please do not send money. Now we're going to show you how to calculate the tax. Even though in this example you qualified to take the exemption, we want to show you how to calculate the tax for those accounts that will be greater than $10,300 in taxable value. The taxable value in this case is $2,838. That is times by the mill levy rate. In our example, we are in Tax District 24 and the rate is 0.013535. Multiplying $2,838 by that mill levy rate will equal the tax due. If you have moved since the printing of your filing statement, please contact our office so that we can verify your tax district and get you the correct mill levy rate. As you can see, multiplying $2,838 by the mill levy rate of 0.013535 equals a tax due of $38.41. Again, in this example, the total taxable value is below $10,300. If you qualify and sign to take the exemption, please do not send any money. Line 7 will only show an amount if you owe taxes from prior years or if you have a credit, money that you paid in prior years that has not yet been applied to taxes owing. Line 8 is the totals of lines 6 and 7. If you do not have a number on line 7, it will be the same number as line 6. All filers, whether you are claiming the exemption from tax or not, need to complete the box that is highlighted here, right below line 8. Be sure to include your signature, the date, and a current phone number where we can reach you. Again, if you are claiming the exemption from tax, please remember an exemption from tax means you do not owe the tax. Please do not send money. We'll quickly just review the criteria for taking the exemption. The total taxable value of your assets must be at or below $10,300. You must have made a full disclosure of all assets. You may not have taxes owing from prior years. And you must sign for the exemption and return your filing statement by May 15th, 2017. If you're signing for the exemption, you do not owe tax. Please do not send money. If you have any questions or need further assistance, please feel free to contact our office at 801-451-3249. Thank you.